Tesla joining the world's most widely tracked stock benchmark. And it comes with shares at a record, up more than 700% so far this year. Phil LeBeau joins us with a look at the stock's volatility and the next big catalyst for Tesla shares and Elon, just never-ending entertainment. Thank God. That's the best thing about Twitter, I think, might be Elon. May he never rein it in. That's my Christmas wish.
I'll be curious. 5 years from now, people might look back at those crazy years when Elon was tweeting nonstop. He has, he goes through these ebbs and flows, Joe, where he tweets, then he doesn't, then he tweets. But let's talk about what we're going to be seeing with Tesla shares today, because this is about volatility and whether or not you will see Tesla be as volatile once it's in the S&P 500 as it has been in the past. Look at pre-market. It's already indicating that it's going to be down, more than 4%. Well, our data team crunched some numbers, and when you compare the price volatility in the last year of Tesla shares versus the rest of the S&P 500, yes, it is more volatile. In fact, the comparison numbers, the S&P 500 volatility, on average, 3.37%. When you take a look at Tesla's average volatility, it's much higher, 5.69%. That volatility, along with a number of analysts who are saying, okay, you've got the inclusion here, but look at the run-up. Is it time for a pullback in these shares? That's why some people are saying, look, this is set up for at least a week or two before we have another catalyst where we could see a pullback. CFRA on Friday out with a downgrade of Tesla shares. And it basically comes down to this. Look at how far this stock has come. After a year-to-date run-up of 700%, we think future growth expectations are now appropriately bullish. And after a multi-quarter run of positive news, we struggle to identify the next catalyst in the story. Well, here's one that people are going to be pointing to. It'll come shortly after the new year. That's when we will get the Q4 and full year Tesla deliveries. This is a little bit hard to understand on this wall, but the bottom line is this. They are expecting, or they have guided, for deliveries of at least 500,000 vehicles this year. They're at about 336,000, 360,000, something like that. So they've got to have their best quarter ever in the fourth quarter in order to hit that 500,000. Now, Joe and Becky, if they come up at 485,000 vehicles, are people likely to sell off on the stock? Depends on what their guidance is in terms of deliveries for all of 2021. And we may not get that right when they report the Q4 and full year delivery numbers. We may not get that until they report their Q4 earnings later in January.
Shepard Smith here. Thanks for watching CNBC on YouTube.